Welcome to the Be Smart podcast, how not to be an idiot with your money. We have a lot to talk about as it pertains to Tariff, man. But first, let's talk a little Miami. It was good to see you this weekend in person, get to see one of your sets.
Was I taller or shorter than you imagined?
A little taller. A little taller. I'm not the tallest guy, though.
Well, you're like 5'10", right?
Yeah, that's about right.
Yeah, I'm 6 feet.
I was going to say the hair in person looks immaculate.
In Miami, it looked terrible because of the humidity. It was like all frizzed out and stuff. So, yeah, but just so, people obviously don't know what we're talking about. I had a DJ gig at the Real Vision Crypto Gathering down in Miami. It was at the Surf Comer Hotel out by the pool. I think it went great. I think people really love the music.
I got a kick out of Real Vision's pass to get in. They didn't give you like a bracelet or anything. They gave you this giant banana, which I guess you were supposed to wear on a lanyard, but they were out of lanyards by the time I got there. So I had this thing just hanging out my pocket.
Is that a banana in your pants, or are you happy to see me?
I know. I was very cognizant of that look. I got a banana just hanging out of my pocket to the side. I don't know. We talked a little Raymond Carver when we were there. I actually have a second copy of what we talk about when we talk about love. So if you want me to send that to you, I can definitely do that.
Oh, yeah. Yeah. Please do. Yeah.
Sweet. All right, cool. You want to get into tariffs and the market headlines?
Yeah, I'm already sick of tariffs.
Me too. And it's changing by the minute.
I know. This is going to be stale. There's so much stuff going on.
So the first headline from the Wall Street Journal: tariffs roil markets, Dow futures fall, and oil prices jump. We're going to start at the beginning because I know things have definitely shifted since the opening, but global markets took a hit in response to the Trump administration's tariffs on Canada, China, and Mexico, with stock futures lower and the dollar and oil rising early Monday. The move to impose the levies caught investors off guard, as many had seen them as more of a negotiating tool. Economists have warned a trade war risks boosting inflation and denting growth. President Trump acknowledged Sunday there could be some pain for U.S. consumers, but said it would be, quote, worth the price. Investors flocked to longer dated treasuries, dragging yields on 10-year and 30-year bonds lower in early trading. Some economists expect the tariffs to tip America's neighbors into a recession while weighing on economic growth domestically. So just as a snapshot leading into Monday, stock futures fell, auto stocks slid, oil rose, the dollar strengthened against a range of currencies, and elsewhere in markets, Wall Street's fear gauge leapt, though it remained well below recent highs. Global indexes fell, with stocks retreating in Europe and through much of Asia, and cryptocurrencies sold off. Let's get into this. For the immediate term, is market volatility the only thing that can change Trump's mind on tariffs? I'm now seeing that the U.S. and Mexico are talking about putting these tariffs on hold for a month. But who knows at this point?
I don't think anything's going to change Trump's mind on tariffs. Nothing. First of all, let's back up a second. So after the tariffs were announced Sunday night, when the FX markets opened, the Canadian dollar was down about 2%. The euro was down about 1.5%. One thing to understand about FX markets is that sometimes you get these panic moves on Sunday night when everything opens. Those moves are usually the higher low of the move, right? So, like, for example, like I forget where the Canadian dollar printed, like 148 or something like that, like dollar CAD. Like, I would say that's probably going to be the high of dollar CAD. I've seen people on Twitter, extrapolating the trends, saying that dollar CAD is going to 2, that, it's nonsense, right? It's nonsense. So what happened today was, so Trump is putting tariffs on Canada and Mexico. Claudia Sheinbaum already capitulated. So she said she's going to put 10,000 troops on the border for fentanyl and stuff like that. And he postponed the tariffs for a month. So the peso, which got monkey hammered last night, is already pretty much back to unch, right? And he has a call with Trudeau today at 3:00 to talk about the same issues. My guess is the same thing's going to happen, right? The other thing to point out is that stocks were down about 2% overnight. As we're talking right now, they're down about 1%. If Trump has his call with Trudeau and he decides to postpone the tariffs, stocks could be back to unch for sure.
Right. And I'm seeing now Trump says China tariffs to be substantial if no deal. So he really is weaponizing these tariffs.
So I want to read something to you. I have this from Scott Besant. Sorry. Besant, I forget the name of his hedge fund. It was like Square Point or something like that. All these hedge funds sounds the same. But he said in his investor letter to his investors, he said tariffs are inflationary and would strengthen the dollar. Hardly a good starting point for U.S. industrial renaissance. The tariff gun will always be loaded and on the table, but rarely discharged. That's what Besant said a year ago in one of his hedge fund letters. Already we're discharging the gun. Like 2 weeks into Trump's presidency, we're shooting the tariff gun all over the place. And like Besant said, hardly a good starting point for a U.S. industrial renaissance. I still think he's going to crap on the dollar. I still think that they're going to do that. So.
That was absolutely my next question. I mean, what do you make of the dollar at these levels, and do you think it's going to come back down?
I do. And this is one of these situations in trading and markets where there is absolutely no fundamental reason to believe that the dollar is going to go down. All the evidence says that it's going to continue to go up. And it's usually in those situations that the market surprises everybody and does the exact opposite thing.
And this isn't mentioned in this article, but gold rose to a fresh record as Trump tariffs trigger haven demand. What do you think about this? Are we going straight through 3,000 now?
Yeah, tariffs are bullish for gold. So spot gold broke out through 2809, which was the old high. So it's through the old high. I mean, it's pretty much a straight shot to 3,000 for spot gold. And that's an easy trade. That is a trade that is really not going to test you. So just, I mean, everybody who reads my newsletter is probably long a lot of gold, so just stay long.
Next up, we got to talk Musk here from Bloomberg. Musk outlines scope of plan for Doge cuts, starting with USAID. Elon Musk, who now runs the government efficiency initiative he calls Doge, sketched out plans for aggressive cuts to U.S. spending and regulations that include wiping out the U.S. Agency for International Development, and suggested the bond market should thank him. Musk said he has Trump's blessing for the move to end USAID as a standalone agency and fold what's left of it into the State Department. Musk also said he'd be giving a talk this week with JP Morgan CEO Jamie Dimon in an effort to convince bond markets that his cost-cutting initiative should instill confidence in U.S. debt. Do Musk's cost-cutting initiatives instill confidence, or do you think we're breaking too much too fast here?
What's interesting is that, for all the crazy stuff that's going on in markets, the bond market is actually pretty quiet. I think the way I interpret this is that it stopped going down. The bond market has stopped going down, which it went down relentlessly for months. So I think that's a good sign. Also, Besant has been named the interim head of the CFPB, the Consumer Financial Protection Bureau. And, Besant is wearing two hats. He's Treasury Secretary and he's head of the CFPB. And he basically froze all work at the CFPB. He just told everybody to stop working. And I think this is a precursor to eliminating the CFPB altogether, which they should. The CFPB is a rogue agency. It doesn't get appropriations from Congress. It gets its funding from the Fed. It's accountable to nobody. We should get rid of this agency for sure. So I hope that happens.
Let's touch base on private equity here. I was watching the Prof G podcast last week. That's Scott Galloway's podcast, and they were talking a little bit about this. So it seems like private equity and the meltdown is kind of spreading a little bit here. The headline here is investors offload a record volume of private equity stakes in 2024. Volumes traded globally reached $162 billion in the so-called secondary market, where investors in private equity or other private funds sell their stakes to new investors for cash, or the fund managers themselves sell company stakes to new funds. The total was a 45% increase on the previous year and more than 20% higher than the previous peak in 2021, according to an analysis by investment bank Jefferies. Where do you stand on PE now? Are things starting to unravel in your estimation?
I still don't think things are starting to unravel. But I mean, that is kind of an interesting data point. I hadn't heard that. I mean, you know what that sounds like to me is it sounds like distribution. So like when a technician looks at the stock market and you have the market on the highs and you have this period of distribution, and that's where stocks are passing from strong hands to weak hands, right? And that's what's going on in private equity in the secondary market is it's passing from strong hands to weak hands. So that I think is a bearish sign for private equity. I mean, look, like if you are an LP in a fund and you've been holding it for 7 or 8 years, and you have this 20% IRR, and you don't want to wait another 2 years in case there's a recession, and you want to get liquid and you want to sell it to some knucklehead, like, I think for sure, like that makes sense.
I've got one more headline for you. This one's a little silly. Robinhood will let you bet on Super Bowl 59. Let's start with this cringy opening line from the article.
Yeah, this is the Kalshi thing, right?
Yeah.
Yeah.
This cringy opening line. Robinhood Markets aims to score a touchdown with its first foray into sports betting. The online trading platform ended months of speculation on Monday by saying it will launch event contracts for Super Bowl 59, allowing customers to place trades on who will win the big game, the Kansas City Chiefs or the Philadelphia Eagles. Robinhood's always kind of been a pseudo gambling platform, but I guess we're now getting into sports betting. What's next? Slot machine games?
Come on, Cameron. Just you got to get with the program here. I mean, this is a way for people to save for their retirement by betting on the Super Bowl. This is how they're going to save for retirement. But Robinhood is a dirtbag brokerage. Look, I have a lot to say here. Some of it I can't say on the podcast. I'll tell you later. But they kind of talk outside. They kind of talk out of both sides of their mouth. Like on one hand, they're like, "Oh, this is for serious investors, and we're investing for the long term and stuff." And then they turn their app into a video game and they make it fun and like, you press these buttons and you're trading. Like Robinhood gets most of their money through payment for order flow. Like that's where they get their revenue. So if people don't trade, then they don't make money. So what they want to do is incentivize people to trade over and over and over again.
I got off Robinhood after the GME fiasco a few years ago, and they halted trading. I had seen enough after all that.
Why were you buying GameStop?
A little bit. Not much. Not much. But it kind of pissed me off that they just halted trading.
Well, they didn't halt trading. They took away the buy button.
The buy button. That's correct. Yeah. So, I don't know. Robinhood's an absolute mess.
Well, if you think about what was happening with that, like, Robinhood routes all their order flow basically to Citadel. And, Citadel probably, I mean, there was a lot of stuff going on. I mean, these hedge funds were short. They were getting squeezed. Citadel was probably making money off the trades, but like it was getting absurd, and there was probably a lot of pressure on Robinhood to stop the madness, so they took away the buy button.
We have one question from the mailbag from Alex about the awesome portfolio. So he writes, earlier this month, I bought the No Worries book, partially to learn a little bit about the awesome portfolio and how it might be different from Harry Brown's permanent portfolio in fail-safe investing and other sources that suggest 25% cash, stocks, bonds, and gold. What I'm missing in reading chapter 14 is why to include real estate as a fifth pillar. Diversification, yes, but why is it beneficial or necessary diversification? The only guess I've been able to come up with is that most readers have purchased a house and should explicitly include that very large purchase as part of their awesome portfolio. For Alex, he'd have to shift some assets into V&Q because he's never wanted the worry of owning a residence. What do you make of this idea of including real estate as a fifth pillar, and why?
Did you say his name is Alex?
Yes.
So unfortunately, Alex, you're going to have to buy another book to get the answer. You're going to have to buy the Awesome Portfolio book, which
He
is coming out.
wrote about that. Is it going to be addressed in the Awesome Portfolio book?
It is, but I can talk a little bit about it now. I've written half the Awesome Portfolio book, a little more than half. And I talk about Harry Brown and I talk about the permanent portfolio. And what I'm trying to do is like head off criticism that I'm like ripping off Harry Brown and stealing his ideas. And I think the permanent portfolio was a great innovation, but I think it was incomplete. Because the permanent portfolio, which is just stocks, bonds, cash, and gold, if you have periods of inflation, the permanent portfolio doesn't do all that well. And it didn't do all that well in the 70s. And also, like Alex says, a lot of people, just in the course of their daily lives own real estate, through their house, right? And if you have the permanent portfolio and you have a house, you actually kind of have the awesome portfolio, right? Like because you own real estate too. If you don't have exposure to real estate in some way, shape, or form, you need to get exposure to real estate because it does give you that exposure to inflation, right? So the awesome portfolio tends to do better during inflationary periods, kind of like we're in right now. So and also like real estate, kind of like gold, has some really good risk reducing characteristics. It's not necessarily correlated with stocks. It's not necessarily correlated with gold. And it once again, it reduces the risk of the portfolio. So that's a good question, but there's going to be like 10 pages of the book that talks about why you add real estate to the permanent portfolio.
In the week ahead will bring several key updates for the Fed on the employment side of its mandate. The January jobs report due out Friday morning is expected to show the U.S. labor market added 150,000 jobs in the month, down from the 256,000 seen in December. Meanwhile, the unemployment rate is expected to hold steady at 4.1%. The report will also include revisions to labor data from the past year. And we got a bunch of tech, media, and pharmaceutical earnings. I don't know if you want to get into that.
We got ISM data today, and it came in a little bit hot. I don't think the markets are super focused on economic data right now. I think they're more focused on tariffs. So I think that, from a market standpoint, the payroll number is a little less important. I saw Raphael Bostic today said that he wants to delay any rate cuts a little bit. So I think the Fed is going to be holding rates steady for a while, like probably 6 months anyway.
How was your after party Miami stuff? You go to a club?
Yeah, we went to M2, which is on Washington Street. And M2 used to be Mansion. You probably heard of Mansion. Like Mansion was a very famous club in Miami. And they completely renovated it, and it's M2 now. I loved it. I thought it was a great club. I'm kind of like a connoisseur of clubs. Killer sound system, air conditioned. It was nice and cool in there. There were actually some couches. So I got there early. So, I'm 51 years old. So I just like sat down on the couch. And nobody was making me get bottle service or anything. I could just like sit on the couch. And the music was great, and it was a great experience. What I'd like to do is next time Real Vision has an event in Miami, talk them into renting out M2, and we'll have a party there. I think that would be fantastic.
Well, maybe they'll let me in there. In 2008, I tried to get into Mansion. Of course, I was not 21, so they wouldn't let me in. It was after the Florida-Oklahoma national championship game. They were not having it.
Well, they asked for ID?
Yeah.
They didn't ask for my ID, obviously.
And of course, I was with like a group of friends, and these guys were able to just waltz in, and I had contributed some money for the VIP bottle service. And these guys just waltz in and abandon me on the street. Very fortunate, though, because I was just standing on the curb outside Mansion, like, okay, what's my next move? I've been completely abandoned. And my brother walks up, just complete serendipity. So I was able to hang out with him and his friends for the night. But friends like these,
Just left you in the lurch.
Just yeah, like screw you. I've got another little funny story about this recent trip to Miami. So I made a reservation for dinner at the social club, which is attached to the Kimpton. And so I roll up there at 9:30. I'm like, hey, I got a dinner reservation. And the hostess is like, I have got to check with management because we're so overwhelmed. I know you have a dinner reservation and everything. Now, mind you, there are dozens of free tables, but the bar area is so rowdy with what I imagine is a spillover from the crypto party. The crypto bros were out in full force, just screaming. I don't know if they were super invested in the Arkansas, Kentucky basketball game or what, but finally I get seated. I'm eating dinner and it's just so loud in there the entire time. And the staff just keeps coming over and apologizing. And by the time I finish dinner, I get up and I'm walking out. And one of these guys rips his shirt off and just starts screaming. And like the staff is like, dude, guys, you've got to chill. So I imagine they probably got booted out of there. But it was basically the circus in Vegas.
This is why I like being the opening DJ. You know,
Yeah. It was crazy. It was really bizarre. It was a small little bar and restaurant. And they were getting after it.
So what'd you think of the music?
Oh, it was great. I really liked it. I want you to send me some mixes. I guess I can get on your SoundCloud and listen to
just get
some
on
stuff.
the SoundCloud. Yeah. A bunch of people asked me to post it on SoundCloud, which means I would have to like record it all over again in my house. And I don't really feel like doing that. I just tell people like, look, like if you like the music, I get a ton of stuff on SoundCloud. But there was a guy from Real Vision in Asia who loved it and said he wants me to play out in Singapore. So that might be fun.
Yeah, for sure. I think that wraps it up for the pod today, unless you got anything else you want to discuss.
Let's not be idiots with our money.
100%.
Yep.
Everyone, please like, subscribe, drop us a comment. You know the drill. Jared, I'll talk to you here soon. Later.
See ya.